All right, ladies and gentlemen, hello. My name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com. And today is Tuesday, ladies and gentlemen, Tuesday, the 9th of the 2025. Sounds cool, right? Anyway, it's the 9th of September, ladies and gentlemen, and still the year is 2025. Look, I wanted to pick up on one economic data event that's coming out this week. So yes, that's going to be the ECB interest rate decision. But before we go any further, as always, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. So yes, as you know, we have a bunch of other economic data events that are coming out. We have the US CPIs, but I did already a video on that. You can find it on our YouTube channel, so check it out. It's in the videos section. But yeah, this one I wanted to do on the ECB and just basically to see what's happening and what could we expect and what kind of a market reaction in some instruments we could get. Anyway, also just a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. Ladies and gentlemen, the economic calendar. So yes, Thursday, apart from the US CPIs, which are going to be after the ECB interest rate decision, or should I say, they're going to be, the US CPIs are going to be in between the interest rate announcement and the press conference. So basically, it's an interesting moment. I think we should get like a lot of volatility, especially in the euro dollar. But yeah, look at this. I mean, the moment the interest rate expectation is for the same number, 2.15 plus 2.15. Basically, the bank is done with the cutting, or at least for now, because last time we saw the bank kind of coming out with the flat rate, with a flat decision, with no action. Last time they cut the rate was back in June, if I'm not mistaken. Let me just double check. Yep, yes. They dropped it from 2.4 to 2.15. Now they're taking a wait-and-see approach. Look, EU inflation remains around the inflation target, which is 2%, and the current EU inflation, the headline year-on-year figure showed up recently at 2.1. So in a way, everything's still fine. Maybe the growth rate, that's what we need to keep an eye on, because lately it kind of dropped significantly. So we got the Q2 GDP figure, and that came out. Well, it shows that it came out recently, but let me just double check very quickly. The 5th. Sorry, it's not. It was last week. I'm looking at the wrong date. It was on the 5th, on Friday. So we got the growth rate, the estimate basically, and that came out. The Q on Q came out at plus 0.1. So of course, it's not the final one. We're gonna wait for the final one that closer to the end of the month. But yes, something for the bank to kind of keep in mind, because look, I'm not saying that they're gonna go straight away and cut interest rates in order to maybe boost the economy or anything. No, because at the moment, I don't think that they need to, unless they really want to drop the rate below 2%. So, but again, it's I think at the moment it's fine, because again, inflation started slowly picking up. Let me just show you what I'm talking about here. AU inflation rate. So this is the chart, and this is how inflation looks like. I spoke about inflation of the US, and basically it looks kind of similar to the US headline CPI figure, the year-on-year number. And if you would ask me to, let's say, apply technical analysis on this, I mean, I already mentioned this in several videos, that whenever we have a sharp decline and then a gradual decline, then it follows with an up move. So going back to 3%, that would be a bit of a big deal for the EU. However, getting closer to 4, that would even be a worse deal. So bigger, worse deal. Yes. So I mean, of course, don't get me wrong. We were here. We were at these levels here back in 2022, but there was a different reality. Now it's now it's this. For us to see a sharp move like this to the upside, well, I think that yes, some sort of a crazy crazy conflict should kind of break out, and then yes, we could see this this move to the upside in inflation. Look, a long story short, for now, what we're expecting here, 2.15, yes. So how the market could react to this? Now, first of all, let's have a look at the German DAX very quickly. The cash index today, we're seeing a little bit of a retracement here, but overall, it's still holding above the 100-day EMA, shown as the blue line. So as long as we stay above that line, I will remain positive. I'll remain positive with the at least with a near-term outlook, but I would actually prefer to see a push above the 50-day EMA and this 23,000 kind of 922 zone, or even better, the 24,000 zone. I would like to see a push back above that one in order to get comfortable with some higher levels. So, long story short, for now, we are keeping an eye on this little area because we're currently stuck. If somebody would ask me, for example, right now, what's the greater chance for this one? Where could this break out with a greater chance? That's the word. These are the words that I was looking for in my vocabulary. But basically, there is, according to all the TA rules, technical analysis rules, then this could lead to some downside. Because look, we had a drop and now we're kind of ranging a little bit here. So whenever we start ranging, we look at the prevailing trend. Whenever we start forming some sort of a formation, some sort of a pattern, we look at the prevailing trend. The prevailing trend is to the downside. That's why the greater chance for this one is to break out lower. That said, we need a clearance. So what I'm going to do here is I'm probably going to keep an eye on this little upside line right here. And if this gets cleared, at the same time, we could clear the 100-day EMA, this way opening the door to some lower levels. And by lower levels, I mean the 23,376 territory marked by the lowest point of August. And if that gets cleared, the next target for me is, of course, the psychological 23,000 zone. But again, let's not rush into things. In general, if the rate remains the same, I think that it depends on the rhetoric and depends on the press conference. In general, this part, it's kind of going to be like something like of a given. So I don't really expect much action here. I expect a lot of action here, but then I expect more European action around the ECB press conference. So keep that in mind. So we might see some more bigger moves in DAX after the CPI, US CPIs, and the Christine Lagarde's press conference. So keep your eyes on that. Like I said, it's quite an interesting position where we are right now. Technically, yes, should I say, not technically, but from the technical perspective. So yes, keep your eyes on the potential breakout areas here. Let's have a look at the European currency, which is the euro, and against the very popular US dollar. So yes, there we go. Yesterday we saw a breakout here. We broke my downside line taken from the highest point of July. We broke it, and so far what we're seeing here is the scenario, basically the idea that I keep on mentioning. If you have been watching my videos for some time now, I keep on saying whenever we break a trend line, we tend to revisit it from the other side, sooner or later. Sometimes when it happens sooner, that's great. I like it because, again, we kind of get that thing out of the way and just focus on on the further direction. Normally this should rebound and push higher. However, of course, I'm taking into consideration that something might happen here. And look, if it's euro dollar we're talking about, we're of course watching the not only the CPIs, the US CPIs, but tomorrow's PPI. So the producer price inflation metric is coming out, so keep your eyes on that one. Yep, at the moment the expectation is for a lower number on the PPIs, apart from the year-on-year figure. Okay, that's interesting. So if it somehow comes out on the higher side, maybe just some strength in the US dollar could be seen, but we could see Euro USD then drifting lower. But again, I somehow I don't know. We'll let's not over speculate on this. Again, the theory is one thing, but when the data comes out, that's what we need to keep an eye on. But in general, if somehow we get a higher number than the current forecast, 3.3, then that could strengthen a little bit the US dollar. Maybe it would send like some sort of like an impulse for now, because then we would need to keep an eye on the CPIs, because that would be like the final, final moment of determining the direction for the US dollar this week at least. So long story short, for now, I'm leaning towards the upside here on the Euro USD. But again, given that we have big data coming out tomorrow and then on Thursday, I would strongly recommend to be very careful here. But yeah, if we somehow look, my downside scenario on the Euro USD is if we do drop below the 50-day EMA here shown as the green line, because so far it has been a fantastic area of support. If we fall below this, I'm leaning towards the 100-day EMA. And very quickly on Euro GBP that I wanted to pick up on here. Look, first of all, I need to remove all the drawings and have a fresh look. And what we're seeing here is a moment where we're moving away from some key areas of resistance. Like, for example, here. We did try to approach this one, but then failed. So in a way, we created a lower high. And that, of course, is a little bit of a bearish indication. Now, what's happening here? Are we creating lower lows? No, not really. So what we're having here is a moment of a possible coiling up. A possible coiling up moment. We're in that case, we're going to be waiting for a clearance through one of the sides, unless unless it drags on, but unless it kind of, gives us some sort of a false breakout or something like that. But look, either way, I would say, wait for this one to clear one of the sides, one of the trend lines, and then we can do something about it. In general, Euro GBP is not my favorite pair, because it has sometimes a mind of its own, but I still do look at it because, again, it's quite interesting. Look, in general, if we do clear the lower side here, and we clear this upside line and this 50-day EMA, then yes, I'm leaning towards the downside, but then the downside could be limited a little bit with this upside line. Somebody might say, but hey, that's quite a decent, decline, decent area to fill. True. So if you're happy with this, honestly, this could be, your kind of game plan. But I would say, watch out for the 100-day EMA, watch out for the 200-day EMA, and then we could see, and if we clear those two, then we could consider a move towards this upside line. For now, we're stuck in between the two trend lines, so we're waiting for a break through one of those. So, ladies and gentlemen, that's it for this little session. I just wanted to pick up on this, and hopefully you found it useful. Like I said, prepare yourself for the ECB interest rate decision. No surprises are expected. But the press conference of Christine Lagarde, now that's what's going to be interesting, because again, if suddenly they will start saying that there's a problem, they fear inflation, that inflation could rise, maybe that could strengthen the euro dollar, or just in general the euro. So yeah, ladies and gentlemen, let me know your thoughts in the comments below, and we'll go from there. As always, stay safe, have your stop losses in place, risk only what you can afford to lose, don't overtrade, and everything will be fine. I'll see you later. Bye-bye.